Welcome back to the channel, everyone. Today I want to talk about the largest ever dark pool fraud, the investigation for which has just been reopened. I also want to talk about the Chicago Tribune, Ken Griffin's local newspaper, saying that dark pools need more transparency and more light. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, the Chicago Tribune posted this recent article on dark pools. They've said the stock market is in a very dark place these days, and not just because of the volatility brought on by Russia's deplorable invasion of Ukraine. It says wholesalers and dark pools, as they're known, have come to dominate a big part of the financial world, accounting for as much as half of US stock market activity, and especially targeting small-scale retail investors. One of the most prominent dark pools is run by Citadel Securities, owned by Chicago billionaire Ken Griffin. It says the trouble is, dark pools have built-in conflicts of interest. For instance, the orders they fill are not competing against other orders, as they do on transparent public exchanges, so the price is open to manipulation. And the fact that a relatively small handful of companies control millions of stock transactions on dark systems that aren't as open as traditional lit exchanges leaves the nation's financial markets vulnerable. And even the Chicago Tribune says the problem needs fixing, and before the next scandal, please. Which leads me on quite nicely to this article from The Guardian. It says Barclays is being investigated in the US over dark pool activities. Now, as a bit of a TLDR, this article was run all the way back in 2014. The SEC actually completed their investigation and charged Barclays with a $70 million fine. And they also followed up by charging Credit Suisse with an additional $84 million fine on top of that. You may ask, Tom, why are you bringing up an article from 2014? Well, the Telegraph posted this story 3 days ago saying that Barclays faces a court battle over the dark pool fraud. Now, annoyingly, I can't get into the Telegraph website as it's hidden behind a paywall, but it seems like this investigation is being reopened. So back to the Guardian article. It says the New York Attorney General alleges systematic fraud and that the private trading system at the bank invited predators. It says the scrutiny of the dark pool practice intensified following the March release of Martin Lewis's book Flash Boys, A Wall Street Revolt, which argues that high-frequency traders have rigged the stock market by taking advantage of systems unavailable to others, just like dark pools. Schneiderman, which I think was the New York Attorney General, said the facts alleged in our complaint show that Barclays demonstrated a disturbing disregard for its investors in a systematic pattern of fraud and deceit. He added Barclays grew its dark pool by telling investors they were diving into safe waters, basically just like Citadel is doing. According to the lawsuit, Barclays' dark pool was full of predators. And the latest accusations by the Attorney General allege that Barclays never prohibited any traders from participating in its dark pool, no matter how predatory its activity was determined to be. So it seems like dark pool operators like Barclays and Citadel let anyone operate within the dark pool even if they're committing serious crimes, they just let it fly under the radar. And he said Barclays overrode certain liquidity profile ratings, including for some of its own internal trading desks that engaged in high-frequency trading, by assigning safe ratings to traders that were otherwise determined to be toxic. And Bloomberg even quoted the Martin Lewis book by saying, why would anyone pay for access to customers' orders inside a Wall Street bank's dark pool? The straight answer was that a customer's stock market order inside a dark pool was fat and juicy prey. Now, clearly the SEC found a massive amount of wrongdoing during this dark pool investigation, as firms collectively paid more than $150 million to settle the cases. Guys, if you're worried about holding your AMC in Fidelity or in E-Trade due to all the recent glitches and the fact that Fidelity actually supports short sellers, on MooMoo's official US YouTube channel, they've stated that MooMoo and Futu does not accept payment for order flow. And therefore, you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. If you sign up to MooMoo using the link in the description below and make your first deposit, you can currently get up to 5 free shares valued up to $3,500 each. So that's a total of $17,500. MooMoo also has tons of technical indicators and advanced charting tools. They publish daily short selling information, position cost distribution, and much, much more. And on top of that, MooMoo is also a commission-free professional trading app. So you guys be sure to sign up to MooMoo and make your first deposit using the link in the description below. Back to the Chicago Tribune, it says the US SEC is responsible for revising its rules to keep up with technology, and here's a surprise, the regulators have fallen behind. They've said the good news is the SEC today has a seasoned chairman, Gary Gensler. But the bad news is that Gary has way too much to do. I think Gary really needs to investigate Citadel and a number of other dark pool operators like Virtue. He also needs to regulate those dark pools and really needs to remove payment for order flow and dark pools entirely. That is obviously a lot of work to do, and so far he's basically failing at all of the above, as he's done basically nothing. That Chicago Tribune article then touches on the SEC Gamestop report, but interestingly, the SEC report about the GameStop frenzy is questioned by academics from Columbia University and the University of Notre Dame, suggesting that the SEC failed to examine relevant securities lending data and didn't study a long enough stretch of transactions. That Superstonk post pulls directly from a Yahoo Finance article saying the meme stock frenzy gets a fresh look that questions the SEC narrative. It says that's the contention of new research that challenges the SEC's view that a so-called short squeeze played little part in pushing GameStop into the stratosphere. It says the regulator failed to examine relevant securities lending data and didn't study a long enough stretch of transactions. Half a dozen academics from Columbia University and the University of Notre Dame and elsewhere asserted in a paper sent in recent weeks to the SEC chair. Those academics said the SEC's October analysis used incomplete data and flawed methods to reach erroneous conclusions regarding the events of January 2021. And he said our findings suggest that the SEC's response to GameStop and other meme stocks may be deeply misguided. So it seems so far that the SEC is on the side of the hedge funds and didn't perform a proper investigation. And I think that ultimately is why Barclays and Credit Suisse were only fined a relatively small amount of money for the crimes that their dark pools commit. Now I also wanted to go through the AMC Q4 earnings and talk about how incredibly AMC has done over the last quarter and for the full 2021 year. So AMC's fourth quarter of 2021 represented its strongest quarterly results in 2 full years. This is obviously good because it means their quarterly results are likely to continue in a positive direction through 2022 and 2023 and onwards. It says total revenues for the fourth quarter grew to $1.1 billion compared to $162 million for the fourth quarter of 2020. Now obviously that's a massive improvement, and if they can replicate $1.1 billion for each quarter of 2022, that's over $4 billion in revenue. Net loss for the fourth quarter improved to $134 million, and of that, 77 was a result of an impairment, and therefore the loss is only really around $60 million. Having a loss of $60 million is relatively small, especially with all the improvements that Adam Aron has lined up for the next year. Fourth quarter adjusted EBITDA was positive $159 million. This means that AMC is now profitable, and as AMC continues to generate profit, they can dig themselves out of their loss hole and eventually pay dividends. And on top of that, operating cash generated was $224 million, and therefore AMC's available liquidity in cash increased to $1.8 billion. That's also increasing at a rate of $200 million per quarter and is therefore likely to increase by another $800 million, if not closer to $900 million, by this time next year. Adam also said that in Q4 there was over 60 million guests at AMC theatres, and again repeated the word shorts were wrong 3 times on the earnings call. This is really interesting that Adam Aron seems to be replicating things 3 separate times. He even said the words shorts are wrong, shorts are wrong, shorts are wrong. Maybe this really is Adam Aron's way of hinting to us that the float is sold at least 3 times over. In my video that will come out later today, I want to explain whether Adam Aron really just exposed synthetic shares on that earnings call. Again, Adam Aron reconfirmed that retail investors hold 90% of the float. He did include mutual funds or ETFs into this number, but did not include insiders or institutions. Now, I think it's also important that you have to factor in the shorted or rehypothecated shares into the number of shares in the float, and I'll go through all of that with you in my video later today. Something that I really want to pay attention to is the exact wording Adam Aaron used on that earnings call and digest what it really means. So again, you'll have to look out for that video later today. But guys, be sure to let me know down in the comments below what you think about the massive dark pool fraud committed by Barclays and what you think about the Chicago Tribune condemning Ken Griffin. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.